You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. I'm your host, Brian Overby, Ally Invest Senior Options Analyst and author of The Options Playbook. All right, last week we looked at Coinbase and we looked at a volatility trade after earnings. It's going all the way out till June. We had 30 days remaining to that expiration date. Coinbase was trading around 230. We wanted the stock to go to 250 and beyond. We saw so far that the underlying stock has gone in the right direction. Stock is now trading, and I should emphasize that we are taping Options Playbook Radio on May 26th. It is after 4 o'clock, so the markets are closed Eastern time. And we saw that Coinbase today finished basically flat, down about 89 cents at 241.52. And we're still looking for some more volatility in that underlying. Right now, the stock has gone towards our strike. We did this back spread that we put on where we sold one of the 2010s and bought two of the 2050s, brought in a decent sized net credit to the account, over $6. And now we need the stock to get beyond 250 before that expiration date, and it's on the right path. But the market, the actual trade has gone against us a little bit, and that's going to have a tendency to happen until it doesn't. In other words, with the back spread, there's a valley of death right around that 250 level on the call side, but we are long two more option contracts than we are short. So from 250 on up, we get a lot of explosion in our delta on the two option contracts that go from out of the money to in the money. So we're still looking for this continued move in Coinbase, which is kind of tracking some Bitcoin right now. I think it's tracking more what's going on with Bitcoin, even though Bitcoin isn't the reason why the company is solid and has solid fundamentals overall. It's basically they've made up the exchange to trade all the cryptocurrencies, or I shouldn't say all. There's a lot of them that are out there. I should say a plethora of cryptocurrencies, and they are making their money off of commissions and executing trades and providing that platform overall. So let's move on. I'm going to talk about Nvidia today. Now, unfortunately, Nvidia just announced earnings, and I only say that because I would like it to be the day after earnings. But Nvidia has been in the news quite a bit. They are a leader in the semiconductor area, and they've recently announced a 4-for-1 stock split. They are basically taken a lot of market share from Intel. which used to be the behemoth in this space. And as a matter of fact, they even came out this week and they mentioned to some people that they are actually going to adjust their chip to make it, I don't know, not quite as smart. And the main reason why is that they found out that a lot of the people that are mining Bitcoin, to go along with the Coinbase theme, are doing so using their gaming chip. And the gaming chip is so good that it is one of the better chips for Bitcoin mining. And they want to adjust their chip to make it less interesting to the Bitcoin miners. And don't quite know how all that works, but it's kind of interesting that you have so much demand that you are actually going to do something to lower that demand overall in that company. But, thinking they're doing the right thing, they don't want to be tied into Bitcoin miners, I guess. And the stock announced earnings just a few minutes ago. And right now, after the big run up that they had going because of the recently announced split, the stock over the last couple of weeks, or I guess it's not even a couple of weeks, has skyrocketed to a new high, up over 25. Well, not quite a new high, actually. I misspoke there. The high is 645, and right now it's trading at 628. But from the announcement of the 4-for-1 split, stock was down around 560, ran up to 628 so far. So they announced earnings. Guess what? Stock is fairly flat in after hours trading after they announced earnings. Not quite anticipated that would be the case, but it's only down 0.5% right now, down $3.30. Okay, so we had a big news week, and obviously earnings would have jacked up implied volatility. They are doing a 4-for-1 split, which is a very straightforward split. They'll take the stock price divided by 4. For every 1 share that you had in your account, you'll end up with 4 shares. So if you own the stock, it's pretty straightforward. And also, a 4-for-1 split is true in option trading. So if you had 1 contract, I haven't gone in and looked into the actual spec sheet that's provided by the Options Industry Council or the Options Clearing Corporation. 2 entities that provide that type of information. But normally when it's a 4-for-1 split, if you have 1 contract, they will do the same with the contract as they do with the stock. They give you 4 contracts as opposed to 1. And then they take the price of that option contract and they also divide that by 4. So it doesn't really affect the terms and conditions of the option contract, but who knows, on every split, they can do something different overall. But where it really usually messes up an option contract is when you're talking about a merger or an acquisition or an odd stock split, like a 5-to-3 stock split or something weird like that. Okay. So we're going to propose just looking at long call options, since this is a $628 stock. It's another one of those fear of missing out situations. We're going to go out further in time. We're going to buy an in-the-money option contract, and we're going to hope that the momentum after earnings get a little bit of a sell-off. That would be great overall for this strategy. It's now down $3.90, or about a little over 0.5%, 0.62% right now, and just try to ride it out. And I think it's a good time to think about this as a strategy if you wanted to get long Nvidia prior to their 4-for-1 split. Their 4-for-1 split is going to be trading X 4-for-1 or after the shares have been received on July 20th at the new price and the new number of shares in your account. So we're going to look, and now you could do it one of 2 ways. You could go longer than July 20th, but the option contracts are fairly expensive, but not even close to expensive as buying the stock outright, right? The stock's on the close today, it was at 628 exactly. So you're talking about $62,800 to buy 100 shares of stock if you want to buy a nice round lot of it. So that's fairly expensive. Now, on the option side of things, we can go out and just buy an in-the-money option contract. We're going to try to get something that will substitute that stock. We'll do a sub that will give us a surrogate or a substitute for that underlying stock. Where implied volatilities are going to come off, and we're using the market close data right now, and that's why I'm saying it's a little bit of a shame, because these vols are going to be a little bit jacked up right now. So tomorrow morning there should be quite a bit difference just because of the change in implied volatility overall. And I'm going to look at the expiration that expires before the stock split. So we're going to look at the July 16th expiration date. We're going to look at an 80 delta, which means we're going to go fairly deep in the money. So $68,000 to buy 100 shares, or we can rent the stock by buying a deep in the money call option with a high delta. And we're going to end up buying the 560 strike call option. Now that call option is trading right now with the markets closed at 76 by 79. Now tomorrow, I think it's a good time to get in because markets should be tighter, because we're going to have a lot of people looking at Nvidia because of the earnings announcement. Applied volatility should come in. So I'd let everything kind of play out in the morning, figure out where that underlying stock is, and in the afternoon, think about buying something that's about an 80 delta. You can do the July 16th expiration, or you can go beyond and trade it after the split. We're just going to look at the July one today. This 560 strike call has a delta of 78. 81 delta. And the market's 76 by 79.30, so we'll call it, guess we'll go 78. We're going to say that we could fill somewhere by the midpoint. We'll give up a little bit there. But if we could buy this for 78, it sounds like a lot. Oh, that's a $78 options. That's $7,800. But you're talking about minimizing your risk to that $7,800. That's the maximum that you can lose. And on a percentage basis, based off of a $62,800 stock, you're talking about 12%. So Nvidia has done 12% on 100 shares of stock easily to the downside and to the upside recently, just in general. So implied volatilities aren't that bad overall. We want a little bit tighter market, but right now the markets are closed. So I think tomorrow, if you were thinking about it, once again, on Options Playbook Radio, it's not meant to be recommendations. We're talking about situations as to, well, if I was going to trade Nvidia today, prior to that earnings report, I would have done something totally different. But now that it's going to have the earnings report, we still got the news in the background about the 4-for-1 split that's still lingering out there. And let's if we get a little bit of implied volatility to come off, maybe we buy this as a surrogate as opposed to buying that stock outright, if you want to get bullish on the chip stocks. So our paper trade for this week would be to go out to the July 16th expiration, 51 days away from the taping of this, and we're going to buy the 560 strike call option with an 80 delta, which means that if the underlying stock goes up 1, we'd expect our option contract to go up approximately 80 cents, and we're going to be paying right around $78 for that, or $7,800 for this trade. And we're looking to ride this long term, going into that 4-for-1 stock split, and make your decision after that what you want to do at that point in time. But this is a fear of missing out. We're going to limit our risk to that 12% to the downside. We're still going to get a lot of opportunity to the upside. And if you want to, and I would do this tomorrow if I was going to do it, because I would put this trade in because some volatility still might be lingering in the afternoon from the earnings report. But you could go out even a couple of weeks in time and maybe sell a near-term option against it. So if you did that strategy, for example, let's say we just looked at the June 4th 700 expiration, which is right now 72 points away. Right now it's trading for $1.30 on the bid. So a lot of premium in those option contracts. Now, granted, this is an earnings, and this might be some type of there's obviously going to be some implied volatility crunch, especially in the near-term option contracts. after that earnings. Most of the time that will happen. But just keep in mind that if you wanted to, you could use this and kind of turn it into the poor man's covered call, otherwise known in the options playbook as the fig leaf. And I would do it on the day of. I would put the trade on, see where the stock is at. Like I said, probably look at it sometime between 10 and noon Eastern time, maybe even a little bit later. Once I bought that long option contract, I would look to shop the short option contract in the near term and try to get some premium, get a little bit of premium on that to help pay for the time premium that we do actually have in that 560 call going out to that July 16th expiration date. All right. So that's going to be it for this episode of Options Playbook Radio. If you have a topic you'd like us to discuss on the show or a question you'd like us to answer on the program, you can send them directly to me at theoptionsguy@invest.ally.com. You can follow me at Twitter. I tweet about all the educational events that we do at Ally Invest. My handle is as simple as it gets, at Brian Overby. Thanks for listening. We'll be back at the same time, same place next week. Till then, may all the options you bought finish in the money and all the ones you sold finish up.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.